Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. Well, what we got going on in the markets today? Dow's down about 600, Nasdaq's down about 150. Markets are not happy right now. Why? Why are the markets not happy? Well, the banking system. Now, Moody's has downgraded the whole banking system. They say that it's deteriorating. And we got Credit Suisse today. Now, they come out and they can't raise any more money. All right, they lost $20 billion in 2022, but now they're having trouble raising money. So that stock's down about 25% today. These banks, they're all tied together. When one goes down, they're going to pull the others down with them. So the market's having a little bit of trouble right now. All right, so the S&P trading about 38.50. Now, what direction do I think the market's headed? Well, the market's going to come down to 3,400 is what I'm saying. That's the October low. Now, the December low is 37.50. That's where it's going to find some more support. Now, is it going to go straight down to 3,400? No, it's not. It's probably going to get a little bit of a bounce from here. We're oversold, very oversold. Markets just being hit hard by this banking crisis, if you will. Markets want to come down, they want to go lower, but they're not going to go in a straight line. We're oversold. Probably going to get a bounce, maybe back up to 4,000 on the S&P. I'm not sure. But then we're going to head lower. This market's going to head lower, about 3,400. That's where the October low is. We're going to come back and retest that, probably take it out. That's my take on the market. Your take may be completely different. All right, so let's get over to the real estate market now. You all know about Silicon Valley Bank, right? I mean, well, they going out of business, right? Well, they're saving the real estate market. That's what I read. I read that because of Silicon Valley Bank, the real estate market's been saved. The article went on to say that because of Silicon Valley Bank, the Fed's not going to be able to raise rates and mortgage rates are going to come down. Well, let's see what they've done. They've come down from 7% down to about 6.7%. So hurry up. Come on, jump in. This is your window of opportunity. Look at this is a trap, right? This is a trap. Everybody, like, you got Dave Ramsey out there, you got Barbara Corcoran out there telling you this is the great time to buy. And well, that's their job. They're not going to tell you the truth because their livelihood depends on this. It's a game, and they're going to tell you the truth when it finally does come crashing down. Now, tell Mike here, I'm going to tell you the truth right now. It's going to come crashing down. Okay, so this is a trap being set. It's kind of like the kiss of death. You go in and buy a house now, you're going to see the house prices come down. Now, a lot of people say, no, Mike, no, you won't. Look, there's no inventory, and the Fed's going to pivot. This is the start of the pivot. Look, I agree the Fed's going to pivot, and this probably already is the pivot, right? This is the financial crisis of 2023. So the Fed's going to have to do something. They're going to have to pivot, if you will. Well, they're not going to pivot with interest rates. They're going to pivot with printing money. They're going to print trillions and trillions of dollars to bail out all the banks, all the pension funds, and they're just going to get that inflation number going higher. You see, this is a moment of truth for the Fed, right? Okay, now what happens if the Fed raises rates? What happens? Well, you're going to get more Silicon Valley Bank situations. You're going to get more banks going out of business. You're going to get more pension funds in trouble, right? But what happens if they lower rates? Well, if they lower rates, you're going to get that inflation taken off. Inflation's running about 6% right now. Now, we had it up to 9%, came down to 6%. But yes, I think there's going to be another wave. This next wave of inflation is being caused by what we're doing right now. It's going to take them $1, $2, maybe $3 trillion. Who knows? It's really a bottomless pit, these banks. You see, these banks, they got all this toxic assets again. They bought all these bonds, and the bonds are worth about half what they bought them at. So what is the Fed going to do? Well, they're going to come in and give them the whole amount, right? They're going to print the money. They don't have the money. They got to print the money, and it's going to be trillions of dollars. They're going to keep giving the banks the money. All right, so they're going to bail out the banks with that. Now, what else do the banks have? Well, they have these mortgages, right? You got your mortgage at 3%. You're not going anywhere. You're locked in at 3%. Well, the bank is holding that mortgage. Now, let's say you got a mortgage for $1 million. That mortgage is probably only worth about $600,000 on the open market, right? That's what the banks could sell it for if they had to sell it. But the beauty is the banks don't have to report that as a loss. There's no mark to market, so they just hold it on their books. But the banks have run out of money. Okay, so what the Fed does is say, hey, we'll take that $600,000 mortgage and we'll give you $1 million for it. Well, that sounds great to me. How could this hurt anything? Well, the Fed doesn't have the million. They got to print the money. Look, we're going to head into that hyperinflation. Now, the good thing about hyperinflation, it's going to open up a lot of eyes for a lot of people. A lot of people don't get what's coming down the pipe. It's coming. I'm telling you, inflation's going to be a second wave. Now, hyperinflation, I pray it doesn't happen, but could it happen? Absolutely. If the Fed keeps printing money, trillions and trillions of dollars at a time to bail out the banks, to bail out the pension funds. You see, the banks, now when you think about it, right, the mortgage is the problem, right? The bank has to hold that mortgage. The house isn't the problem. The mortgage is the problem. They have a 3% mortgage. Rates are up here at 7%, so that mortgage lost value. Now, same thing with car loans. Right now, we're repoing about 15,000 cars per day being repoed. Why are they being repoed? Well, people can't make their payment on the car. You see, they went to the dealership and they bought a $50,000 car. Only trouble is they paid $80,000 for it. Oh, but they locked in at that low interest rate. Yeah, but the car's only worth $50,000. So when they don't pay, how happens? Well, the bank has to take it back. Now, don't worry, because the bank loaned them $80,000. The bank can get $50,000 for it, so that's $30,000 negative. Not a problem. Just bring it to the Fed, and the Fed will give them their $80,000, right? Well, that's what they're going to have to do. They're not saying that yet, but there's a lot of this debt that is toxic assets. That's what the Fed buys. They got 9 trillion of them on their balance sheet. Now, what's going to happen? Well, they're going to buy more, 10, 11, 12 trillion. Probably by the end of this year, the balance sheet will explode that. We're in a financial crisis right now, and people don't understand that. This is actually the moment of truth where the emperor's not wearing any clothes. And believe me, there's nobody out there that wants to see either Janet Yellen or Jerome Powell naked, but they're really not wearing any clothes. They don't have any tools left in the box. There's no tools that can solve this problem. They're stuck. There's nothing they can do. They can raise the rates and crash the markets, or they can lower the rates and we have inflation. Now, you can write in the comments which one you'd prefer that they do, because they're going to, that's their only choices. If you got a third choice, put that in the comments. I'd love to hear about it. But we're in this problem right now. Now, as far as the housing market goes, people say, well, they're going to pivot. This is a pivot right now. We're going to just support the banks. They're going to pivot. They're going to keep rates low. And then houses are going to stay up here or even go higher. Some people think they're going to double from here. It's a great time to buy. Just go ask your local realtor. Look, it doesn't matter if they pivot. Doesn't matter if rates come down, they bring the interest rate back to 0%, we get 3% mortgages again. That's not going to solve the problem. You see, here's the problem. The problem is that, okay, you got a mortgage on your house, right? Okay, and you lose your job. What happens to the mortgage on your house? Well, 63% of Americans live paycheck to paycheck. So for 63% of those mortgages, I'd say they're not going to be getting paid. So the bank's not going to be getting paid. Well, that's okay, Jerome. He's going to give them money for that mortgage, right? But they're eventually going to kick you out of your house, and that's going to become a forced sale. Your neighbor neighbor the same way. When he loses his job, he's going to eventually get kicked out of his house. Now you go, but Mike, they can go out and find jobs. Chipotle's hiring. They're hiring 2,000 more people. They could go work at Chipotle. Yeah, but they were making $300,000, $400,000 a year. Now they're going to go to a $15 an hour job. I don't think that's going to work. That's not going to save the housing market. Look, there's a lot of layoffs coming. There's going to be millions of them. There's going to be bankruptcies. Your neighbors will be bankrupt. Yeah, I pray you don't declare bankruptcy, but these bank failures. But you know, it's funny. It's funny to me. We got these layoffs, right? By the hundreds of thousands every month, millions of them every year, right? So we got all these layoffs, right? We got bankruptcies. Bankruptcies are starting to spike up, right? And we got these banks. These banks, they're failing one after the other, one after the other. But we're not in a recession. Oh, no. Don't say that R word. And heaven forbid if you say the D word. Look, they're going to print this money, but they can't do it forever. This is going to blow up. It's either going to blow up with hyperinflation or it's going to blow up with the markets come crashing down. Okay, so house market, it's not going to matter if they lower the rates. Pivot's not going to help you. The houses are overpriced. It's the bubble. It's the biggest bubble we've ever had. That's just how it is. It's a bubble and it's getting bigger. They're blowing the air in it. This is not going to play out well. It's just not. It's just not the way it's meant to be. Okay, it has to come back. It has to get reset. This whole thing is fake, right? I mean, the stock market's fake. The bond market's fake. We know the bond market's fake. Look at Jerome says, look at every bond is worth 100%. No, they're not, Jerome. They're worth about 40% right now because you keep raising the rates. The bonds go down, but you're going to pay them 100%. So we don't really know what a bond's worth, right? We don't know what your house is worth. Maybe Jerome's going to buy your house. You bought it at $1 million. It's only worth $800,000. Don't worry. Maybe Jerome will come and buy it for $1 million. That's what he's doing with the banks. They're getting the bailout. Why shouldn't you get the bailout? You go buy a house right now. You're going to need a bailout. And maybe Jerome will give you that bailout. I don't know exactly how it's going to play out. If he does, then we're going to hyperinflate. And that's the worst thing that could ever happen to a country. If he does the right thing, and stays the course, when interest rates normalize, no bailouts. Look at capitalism, once again, is getting a bad name. It's getting blamed for all this. As soon as you have a bailout, you no longer have capitalism. Now, where does that bailout go? Usually to the corporations, the big banks. You have corporatism, not capitalism. Look, it's just the way it is, right? So don't blame capitalism for this. We are now a socialist country. The banks are being socialized. Their losses, we're paying for it. They can tell you all they want that we're not paying. Look at when they print money out of thin air, we pay in the form of inflation. All the money you have has now become worth less today because the money that they're printing to bail these banks out. And yes, it is a bailout for corporations, a bailout for the rich people, a bailout for the donors to all the political parties out there. Those are the people that are going to get the bailouts. Me and you, not so much. You buy a house now, you're going to be the bag holder. It's just the way it is. Jerome's not going to buy that house from you. I was making a joke, by the way. He's really not going to do that. At least I don't think so. My goodness, maybe he is. I don't know. Anyways, I'm Tall Mike. If you like this stuff, give me the thumbs up. Why not? It's Wednesday. Hit the subscribe button. Come back and talk to me. This market's going to head lower in the stock market. But I do think we're going to do for a bounce. We're way oversold. Maybe we get the bounce later today, down over 600, almost 700 on the Dow. Having that big drop today, the big flush, but maybe we recover some of it. Maybe we keep free falling. We can fall right to the 3,400 level on the S&P. This could be the big crash. I don't think it is. Here's another reason why I don't think it is. All right, so you got the stock market. Stock market's coming down, right? Look at the junk bonds. They're just moving sideways. Junk bonds are holding up well. Now, those start free falling. Yeah, maybe the crash is here. But I don't think so. I think we'll get a bounce. Eventually, we'll work our way down to that 3,400 level, and then maybe we'll find some stabilization. I'm Tall Mike. Get out there, everybody. Enjoy your day. Bye-bye now.